Hello, everyone. It's Brian of TinyCryptoBlog. Welcome to the open mic for this week. So, the topic of today, liquidity with Bitcoin ETFs. It's expanding, just as I and many others have told you and said, we can see this coming. We've been hearing it coming, and now it's coming. So, getting into the first article that we've got here, expand this out. BlackRock updated their Bitcoin ETF filing and added firms and banks to be able to buy in on a cash basis. So, what does all that mean? So, what it means is one of the ways you can get shares of the ETF is if you have Bitcoin, you surrender your Bitcoin and give it to BlackRock or whomever. They give you shares of the ETF equivalent. And then when you cash out, if I got the mechanics right, you get your Bitcoin back. Essentially, you have to surrender your Bitcoin in order to get shares of the ETF. Another way, which was discussed a lot, was on the cash basis. This is one of the things that was included in a lot of the filings, and I think was something that I don't remember if Gary Gensler was of a favorable opinion of this option or was grudgingly going along. But essentially, you're able to go in with cash, buy shares of the ETF, get exposure to the price movements of Bitcoin, and then when you want to sell, you get cash back. The whole idea is that it simplifies things. You don't have to go through the extra layer and the extra regulatory hiccups of trying to get SEP to buy Bitcoin and then moving off the exchange and the custody and the whole rigmarole. It's just a simple cash in, cash out basis. So in this case, we've got, here's some of the banks: ABN AMRO, Citadel, Citigroup, Goldman Sachs, UBS Securities in Switzerland. Looking at this tweet by Eric Balkunas, I hope I pronounced his name correctly, JP Morgan, Macquarie Capital, Virtue Americas. So it's having these particular companies, these particular financial institutions be accepted, what were they called? Authorized participants, where not just anyone can go in and directly buy. You have to have special licensing and rules, regulatory compliance, et cetera, et cetera. In this case, this allows all the clients of these firms to funnel their money through these firms and then in turn get direct exposure to the Bitcoin instead of having to buy ETF shares on their own. Now, if they have, let's say they use Goldman Sachs and they've got them, they're a client, like a private client where they're managing their portfolio. Now, within their clients' portfolios, they can add the Bitcoin ETF shares and get exposure to that asset class. And let's see, what is our second article here? Chicago Board of Options Exchange seeks SEC approval to mix mutual funds with ETFs. The TLDR on this is that, as it stands, mutual funds and ETFs are kept separately. They trade differently too. That's how they're structured. Mutual funds are bought and sold at the end of the trading day at the price based on the fund's net asset value calculated after the market closes. ETFs trade on exchanges throughout the day. Prices fluctuate just like stocks. And if this rule change that was filed with the SEC is allowed to go into effect, then Bitcoin ETF shares can be added to a mutual funds portfolio. Essentially, a mutual fund will be authorized to buy shares of the ETFs. I wasn't aware that there were rules that kept mutual funds from doing that. I thought it was a case of they buy bonds, they buy stocks. If they buy stocks, why can't they buy an ETF? But apparently there was some delineation not allowing that to occur. Well, this is big because if this goes through, or I'm probably going to say when it goes through, I don't see there's too much money looking at this right now, and eventually there would be too much money. It's going to open up. I was saying that originally we went from going to a fire hose of liquidity to a municipal water main. I don't even know what this is. It's like the water main's just getting bigger and bigger, where not only do you have banks that are expanding who can be an authorized dealer and all the money behind those firms. Now you're going to allow mutual funds to be able to buy shares of the ETF. So if they wanted to have, say, a commodity ETF or a currency ETF or digital technology ETF or whatever that, mutual fund. My apologies there. A digital futures mutual fund or whatever kind of mutual fund it is, they can buy shares in Bitcoin ETFs to get that exposure to the Bitcoin price action, which in the end, this lends itself to, one, more liquidity. So you'll have that much more pressure on the upside, that much more selling on the downside, but within that, you're going to have a much larger pool of overall ownership, because not everyone is going to be jumping in and buying when the price is going up, and not everyone's going to be selling when the price is going down. There are going to be those funds that hold on to those shares, and because they need to hold on to that for the asset class. They're seeing it through. It's up and down. And you're going to have a certain percentage of all the shares that mutual funds own that do not get bought and sold because it's holding a position. So that'll raise, what's the phrase? A rising tide lifts all boats. That's going to raise the tide that much more. You'll get the fluctuation, but that fluctuation is going to be at a higher level. So this will put additional demand on how much Bitcoin is held off of exchanges and from circulation, even further reducing available supply. And the net result being you've got less and less Bitcoin available to be purchased, making what is available more and more valuable. And then when you couple that with slowly growing global adoption for all of its uses, as a monetary network, as a store of value, digital gold, what other uses you can come of it, the increased demand is going to have that much more, and that's going to create price pressure. But like it says, this is not financial advice. Do your own research. Don't invest anything you cannot afford to lose. I'm not telling you what to do. I'm just giving my opinion and viewpoints on this. And I think it's an interesting one because a lot of the things that were going on that I've been seeing over the last several weeks, it's been quiet. There's been news going on, but it's been all the Bitcoin ETF. It's been all this. The horizon, the landscape is changing, where it's no longer just the retail buyers and the few outliers out there. It's now the mainstream adoption is starting to expand, and we're seeing just how it is. And it's going to take some time too. There was an article, What Bitcoin Did podcast, that had Eric Yates and James Lavish. And they were talking about how the process involved for a hedge fund to add an asset to their books, or an investment fund like, I don't want to say your fiduciary for say a pension board or a municipality or something where there's money that needs to be invested and protected and grown in value. And it's not like when you and me decide we're going to take a step and do it and just jump in and buy the ETF or buy Bitcoin or buy an altcoin or something like that. There's a whole legal and fiduciary process involved, and lots of compliance, and lots of decision making by more than just one person, by usually parties of people who have to come to a mutual agreement to do things. And that's going to take time. I had forgotten about that. It reminded me when I listened to this podcast, it reminded me I'd heard this before, maybe 4 or 5 years back. And a person was describing when they were on a board for, I don't remember if it was a pension fund, but they described the exact same process where the fund manager has to go to the board of directors and say, hey, I've got this idea. This is what I want to do. And all the steps, the due diligence, explaining what the value proposition is, why you want to do this, why you want to invest in this, why we should put our money there, what are the risks, what are the potential gains, and go through that entire process. That takes time. So even though we got the Bitcoin ETFs approved and live, slowly, step by step, we're starting to see the adoption come into play. We had the amount of the Bitcoin, the BlackRock and the special status for those banks investment funds. We're seeing now with mutual funds being able to buy shares of the ETF into their funds as an asset. All these things, it's a step-by-step thing. I imagine in time, as we see how well and this bull market holds up and how long it goes and what happens to the price action, we'll probably see, and also against the backdrop of the macro picture, what goes on in the world with economies, values of currency, stock markets, commodities, etc., we'll start seeing more headlines about who's entering the fray, who is now buying shares of the Bitcoin ETF as a hedge, who is buying Bitcoin as a hedge, who's buying Bitcoin for an asset to have as a treasury item on their books. That is another story to watch in parallel, but in the end, it all amounts to basically buying demand for Bitcoin, and that's going to add pressure to the upside. So keep your eyes open for things and watch how events unfold. And you can follow Tiny Crypto Blog on all the social media sites listed in the show notes. And if you want the easy TLDR of what's going on in the space without having to go into detail, though you can if you want, every week I do the weekly summary, headlines and tidbits that help you kind of keep a pulse of what's going on in the space and going on in the world at large. So with that, be well, everyone. Talk to you soon. Have a good week.